Welcome. My name is Kamba again for Investment Strategies. Yes, um, you have heard the news about the Swiss bank, which is actually failing and falling. This is kind of a lemon bank history, which we've been going to see. The banks are really falling, and the stocks are really falling, and everything is plummeting, and which means that the market is going to be very, very bad for investors for the coming actually months that is to come. So we hope that the market actually restabilize itself as we go. But this is something which is really really bad. But anyway, I'm going to go through the analysis from the Reuters about the SVB Bank, and next time I'm going to come with the analysis on the Swiss Credit Bank, which is actually on the fallout. So Swiss Credit Bank is a very big bank which has a lot of influences around the world, and that's something we have to watch out and to see how it's going to happen. The government of Swiss is actually promising to give the bailout, so which is not yet known. So if they give a bailout, which means that the problem is really, really, really bad, and if they don't, that means that the market is going to lose a lot of money, and a lot of investors are going to miss out. So let's keep an eye on that and see how it goes. So, as for the moment, let's see the analysis which I'm going to bring on you about SVB Bank, and that is based on the Reuters papers. So, see you afterward when you follow this analysis.
RAD deepens as SV collapse funds contagion fears. Shockwaves from the collapse of Silicon Valley Bank further pounded global bank stocks on Tuesday as assurances from President Joe Biden and other policymakers did little to calm markets and prompted to rethink the interest rate outlook. So you can really imagine how interest rate has been impacting actually our world today of business, and the business is not as it used to be. Biden's effort to reassure market and depositors came after emergency U.S. measures to shore up banks by giving them access to additional funding failed to dispel investors' worries about potential contagion to other lenders worldwide. So the American government want to print more money and to give them more money, which is going actually to widen the problem because the money is losing its value, and this just does not make sense. So banking stock in Asia extended declines on Tuesday, with Japanese firms hit particularly hard as anxiety about systemic risk sparked a wider rout in market. Bank runs out have started and interbank market have become stressed, said Damien Boy, chief equity strategist at Sydney-based investment bank Barrenjoey. Arguably, liquidity measures should have stopped these dynamics, but mainstream has been watching news and cues, not financing pumping. A furious race to reprice interest rate expectation also buffed market as investors bet the Federal Reserve will be reluctant to hike next week. Traders currently see 50% chance of no rate hike at the other meeting, with rate cuts priced for second half of the year. Early last week, 25 basis point hike was fully priced in with 70% chance seen of 50 basis points. Analysts say uncertainty continues to dog the financial sector, with investors still extremely worried about the health of small global banks, the prospect of tighter regulation, and preference to protect the depositors at the expense of shareholders should other banks fail. Major US banks lost around 90 billion in stock market value on Monday, bringing their loss over the past 3 trading sessions to nearly 190 billion. Wow. Guys, can you think about that? Banks losing $190 billion just wiped out of the market. These are just numbers. So the thing is, once you invest in gold, no one can wipe that out. These are just numbers. Regional U.S. banks were hit the hardest. Shares of First Republic Bank, FRC.N, plunged more than 60% as news of fresh financing fell. To reassure investors, and rating agency Moody's reviewed it for a downgrade. Wow, guys, this is just going to be bad. Europe stocks banking index closed 5.7 lower. Germany's Commerzbank fell 12.7%, and the Credit Suisse slid 9.6 to a record low. Guys, this is really, we're talking about really major losses here. Billions of dollars of people's money, of individuals are just being lost and going to the dump. How do we get out of this situation? And Biden said his administration action meant Americans can't have confidence that the banking system is safe, while also promising stiffer regulations after the biggest US bank failure since the 2008 financial crisis. Your deposit will be there when you need them, he said. Access to deposit. SVB's customers were given access to all their deposit on Monday, and regulators set up new facility to provide banks access to emergency fund. The Fed made it easier for the banks to borrow from it in emergencies. In a letter to clients, SVBs, you see the Fed makes it easier because they're the one printing the money, and the money loses value, and then your money has no value at all. So, it's just a really circle. So what happened is happening again. What happened in 2008 is happening again. And look at the money, the value of the money in 2008 is not the value of the money in 2023. In a letter to client, SVB's new CEO Tim Meyer-Polos said the bank was open and conducting business as usual within the United States and expected to resume cross-border transactions in coming days. I recognize the past few days have been an extremely challenging time for our clients and our employees, and we are grateful for the support of the amazing community we serve, said Meyer-Polos, a former CEO and federal mortgage finance firm Fannie Mae, who was appointed by the FEDIC to run SVB. U.S. bank regulators sought to reassure nervous customers on Monday who lined up outside of the SVB Santa Clara, California headquarters are offering coffee and donut. Feel free to transact business as usual. We just ask for a little bit of time because of the volume, FDIC employee Luis Mayorga told waiting customers. Regulators also moved swiftly to close the New York Signature Bank, which had come under pressure in recent days. So you see, this is a ripple effect going also to the New York Signature Bank. So a serious investigation needs to be undertaken on why regulators missed the red flag and what need to be overhauled, said Mark Sobel, a former senior Treasury official and U.S. chair of Official Monetary and Financial Institution Forum, a think tank. Canada's banking regulators took steps to begin daily check-ins with banks that will enable it to monitor their liquidity, the Globe and Mail reported on Monday. Fallout. In the money market, indicators of credit risk in the U.S. and zero-zone banking system edged up, emboldened by bets and Fed may have to slow its rate hikes. The price of gold and the popular safe haven raised above the key of $1,900. Those expectations have weighed on Japan's banking stocks, which tumbled 6.7% in early Asia trade, the lowest since December. Japanese financial institutions have sufficient capital buffers to absorb any losses caused by external risks such as rising overseas interest rates. The Bank of Japan said on Tuesday it did not directly mention the SVB bank collapse. Yunosuke Ikeda, chief equity strategist at Nomura Securities, said the shift to much less aggressive Fed hike expectation has also tempted the outlook of Eventual pivot in Japan away from ultra low interest rates. So this bank invested in low ultra interest rate, which also caused, because this cannot be sold for much more money either. So this has also caused that they run, they run from the bank. So continues and he says, the pressure to wind position is extremely big here, said Ikeda. The prospect of high interest rate had been the reason of investors have been really excited about Japan bank stocks. Companies around the globe with SVB accounts rushed to access the impact on their finances. In Germany, the central bank converted its crisis team to assess any fallout. After marathon weekend talks, HSBA.L said it was buying the British arm SVB for £1, 1.21. HSBC's Hong Kong listed shares fell more than 5% on Tuesday. While the SVB UK is small, its sudden demise prompted calls for government help for Britain's startup industry and its heavily exposed biotech sector in particular.